In this video, I want to look at some candlesticks and a couple of blip patterns and a few different things. Uh, Obviously, up here at the top of the chart, we've got a top blip. All right, it's not a great top blip, but it's a top blip anyway. The reason I said it's not a great top blip is because it had two green bars. If this bar had been red and then this bar had been red, it would have been a better looking top blip. All right, because you'd have had 2 down days in a row, but it still did work. All right, uh, let's look over in here. Here's spinning tops. Right, spinning top here, which is actually also an inside day here. All right, spinning top, spinning top, spinning top here. If you start seeing spinning tops and dojis, here's a doji. All right, little candle right there is a doji. Here's a doji. Here's a doji. Here's a doji. Right? Dojis mean market indecision. So when you start seeing dojis, that means the market is undecided exactly what it wants to do. Does it know if it wants to go up? Does it know if it wants to go down? The bulls aren't winning. The bears aren't winning. It's a tied ball game that day. Right? Here, doji, it opened and closed at the same price. Right? Now, there's a couple of other patterns that I want you to become aware of, and how to use some blips. Well, you could have used this top blip to exit. If you had been long this market here and gotten long, this market or something here, you could have exited, on this blip pattern here, right? It may have not been a lot of money, but it's some money, 400, 500, 1,200 bucks. What, 1,200 bucks? You could have exited on, put a stop down below here. If you'd gotten long here, been 1,200 bucks on that move. All right. And here that market just going sideways. All right. Covered a shooting star. Oh, by the way, I'm in this market, as you can probably tell here. And I might as well just talk about how I did that yesterday. I looked at that price coming back down yesterday and hitting this support area down in here and bouncing back up. All right. So what I did, I put a limit order down here. Now we talked about limit orders. In other words, that would have been a buy limit. So if the price came down and hit that limit order, that buy limit, then I would have been long the market from this position. And then I put my protective stop down here. As you can see, it's an OCO. One cancels the other one. Right now up here, I've got my exit position. I could raise that up a little bit if I wanted to. There's all kinds of stuff we can do. But anyway, I'll raise that up for right now. Just have it up there. All right. So that's how you would use a limit order. I had a very small risk on that. I could come back in here and bring that risk back up here to 0. And it's not really 0 risk because I'm paying commissions. My commissions and slippage would normally run me about, with slippage and commissions, about $10, $15. So I'm going to use $15. So I'm going to raise my protective stop back up to here. And what I'm actually doing is locking in $15, which means I'm at break even. So I can't lose on that trade unless it gaps or something. Something unusual happens. But I'll move my stop back up. That's a very, very tight stop. And I took a very, very small risk, but I'm up $170 on that. All right. Here's an engulfing pattern. And I didn't have this in the text, but I want to show it to you because engulfing patterns are very, very strong. All right. See this candle here? All right, the one that's turning blue here. See how it completely engulfs this candle here? And there's a couple of interesting things going on here. First, that market came back up here the day before, Tried to take out this high, couldn't do it, and it came back down. And there was a spinning top here. All right, spinning tops aren't nearly as strong as a doji for indecision, but they're still a day of indecision. And the smaller the body, the more indecision there is. Then the next day we had this bearish engulfing pattern, where that candle completely engulfed the previous day's real body. This is called a real body here. All right. Well, as you can tell, I'm getting a chat, but that's okay. One of my students is sending me a question. Anyway, here, that body completely engulfs the prior day's candle. Now, that is a bearish candle, and you can look and see what happened on that. That came down here, and let's say that you decided you wanted to get long on or short on the open the next day, or just below the open. You could have gotten short down here below the low, but it's such a bearish candle. You could have looked and said, okay, if I did that, I'd have about a $600 risk up to here, $700. And if it came down here to these lows, I'd pick up 1800. And you could have done that based on that bearish engulfing pattern. All right, let's see here. Let me turn my notifications off on my phone. All right, I'll get back with my student in a little while. All right, my students subscribe to my daily webinars, and they're also members on a team Telegram chart, and we chat back and forth. I'm going to delete the drawing tools here. All right. So I'm up $185 on that trade. Little tiny trade. All right, but it could turn into a big trade. But it was a small risk of $185. But anyway, be aware of these engulfing patterns. Let's see if we can find a bullish engulfing pattern. All right. Well, here's a very bullish pattern. Didn't engulf the prior day though. Let's see if we can find another one here. A bullish engulfing pattern. Bullish engulfing, bullish engulfing. Don't see it, don't see it. I don't see it. I don't see one. Let's see about copper here. Maybe copper's. Now, I'm in an option play on copper. I sold a call, which you'll learn about in the options course. So if I sold a call and the price goes down, I make money. And as you can see, I sold a call here. Now here's your bearish engulfing day. All right, see this bearish engulfing day? We're turned blue here. Bearish engulfing pattern. Let's see if we can find a bullish. Here's a very bullish day, but it didn't engulf this candle here, but it did engulf this candle, this candle, this candle, this candle. All right. So the last one, two, three, four, for the last 5 bars, this engulfed, which is very, very strong. All right. And as you can see, the market took off. Up here, we have, what do we have here? All right. We have a top blip, all right, that formed. All right. Green candle followed by a red candle followed by a red candle. The price dropped. All right, I got in on that this day up here. One of the reasons, and you'll find out, is because of all of this past resistance that we've got up here. Right, that it just could not get past. Right, so I shorted that market, and like I said, we're up 360 on that. And when did we get in on that trade? We got in on that trade on the 8th. Then we got the weekend. Today is the 12th. Right? So in 4 days, up $360 on that. bearish engulfing pattern. There's a doji. Here's a perfect example of a doji. See the little doji here? Right, where it opened and closed at the same price. And look at the day before. All right. Or over in here, we had came back up here and hit resistance and couldn't get past and came right back down here. All right. I would have shorted that market, or you could have shorted that market. Done a real quick turnaround on that one, maybe. If you'd have shorted it at a breakdown below here, that's a lot of money on that trade. 1500 here, and then you could have tightened stops up. And I'll talk a whole lot about tightening stops, right? Which I just showed you an example of tightening a stop up on one of the charts that we were looking at. What was this was Frank that we were just looking at here. No, that wasn't it. I got into that one too here, and up $42 on that one. All right. It was platinum, I think is what it was. Yeah, it was platinum. Talking about tightening up stops. I moved that stop up to break even plus $15. Right, which is a really tight stop. Normally I don't keep them that tight, but I bought at the lows here. If it takes out this down here, it's probably going to take out the lows too. So I just reduced the risk to nothing. Okay, let's see what else. Engulfing pattern. Here's an engulfing pattern. See this bearish engulfing pattern here, right? Gaps. Here's big gap. All right, we've talked about a little bit about gaps. Here's a gap. All right. Here's another gap here. Right. Here's a engulfing pattern. All right. After a spinning top. See what else we got going on here. Well, that's actually a horrible looking top blip. 1, 2, 3 day pattern. All right. Here's a bottom blip. 1, 2, 3, and that turned around. I don't think I'd have bought that. One might, maybe. Would have to analyze it a little bit closer. But anyway, I just wanted to show you some different charts, with some different candles and things that we haven't talked about, like the engulfing days, bullish engulfing days, bearish engulfing patterns, spinning tops. Here's a good example. Here's almost a doji, counted as a spinning top. Came up and hit resistance up in here. Couldn't get past it. All right. So the bulls tried to pick that day up and run with it. Came right back up here and hit the stone wall and came right back down again. And then the next day it gapped down. Look at this. See that little gap in there? Doesn't look like it's very important, but it is. All right. Little gap here. Right. It gapped down that day. You could have shorted it down here. You could have shorted it, different places. Put a stop up here. You can see back over here. It came right back up and tried to get past this resistance area. Came right back up and tried to get past this resistance area. That's how much shorted it here. I told you a while ago it hit resistance. It's hit that resistance 1, 2, 3. Might as well call it 4 times. Tried to get past that resistance and couldn't do it. Did it try it over here? We got past it a couple of times here. But anyway, I just want to show you some different candlestick patterns and what they look like. Oh, look here. Here's a really good-looking doji. It's just the wrong place. All right, but that little doji right there with the center where it closed and opened at the low. If that had been at the low of a chart, not the low of a chart, but the low of a trend, it is very, very bearish. Right? It's called a gravestone doji. Talk about an ominous name, gravestone doji. Right? Here's one. It's almost a gravestone doji. Had a little bit of a tail on the bottom, but not a lot. Right? Another doji. We looked at that one. Right. Top blip resistance. All kinds of different things going on the chart. So anyway, I hope you enjoyed that little video, and we will talk a whole bunch about all these different candles as we go along, and moving stops, and where to get in, where to get out, how to protect yourself.